So, talking about a little bit about low doc loans. You know, this is not very discussed a lot, and you know, as a broker, I was just talking to you a while back that you do a lot of low doc loans. Tell us a little bit about how those work and what are some things that people need to keep in mind when they are applying for low docs.
Or for who is this low doc loan for?
See, low doc loan is definitely for the people who are who didn't do their tax returns recently, or who deals mostly with the cash, or with the businesses who want to just go for the loan. Okay, so we are talking about low doc loans. Basically, you have to involve other parties as well, like your accountant. You definitely need to talk with your accountant. And low doc basically means we are just providing low doc at this point of time only because we don't have those docs available. Okay, so we are just offering 1 or 2 docs, whatever the bank has, depending upon the banks. And mostly self-employed clients. They go whether they have just started the business or whether they have just started the business just 1 year back, and you know what I mean. So all those people, and basically their accountant will suggest them to go for this one. We are actually specialized with SMSF loans. So this is all about your investors who want to invest through their superannuation. Okay, of course you have to engage your accountant here because definitely financial advising and all is required. But these loans are into the market. And the best thing, I'll just give you a tip for the investor is once you take loan from superannuation, which is called SMSF loan, self-managed super fund loans, your borrowing capacity won't be affected. Okay, so this is totally different because you are taking loan on trust. Okay, and your accountant and your financial advisor will definitely guide you how to form those, and we can help them with the loan.
So is there, I don't know if this question is related to you or not, but with SMSF or with the super fund, is there any exact amount that they need to have in their fund before they can take it out to buy a property, or no, there are no limitations on that?
No, the thumb rule basically, there is no limit actually, but the thumb rule is you should at least have 30% in your super.
Fair enough.
Okay, so whatever the property value is there, at least 30%, because 20% of course the deposit, and the 10% is additional cost, because every single cost will go from your superannuation fund.
Fair enough.
Yeah, this answers a lot of questions because we recently had a client and they wanted to go SMSF. And you know, a lot of investors are getting into these loans these days.
Of
but
course.
It all comes to education. A lot of people still don't know about SMSF and how they work. They've got funds in their
major funds,
but they don't know how to go about
utilize
it.
So that's why we run seminars every second month. In the office, where basically we engage an accountant, we engage buyer's advocate, and we engage a property agent, where we just run these seminars so that we can educate the client exactly what is SMSF, because you're absolutely right, people don't know about it.
Yes. Definitely. Now that you've talked about your office and you do seminars, what other kind of loans do you do at Key Lending?
So we also do car loans and personal loan, asset finance and personal loan. We specialized in SMSF loans, and of course the other loans, home loans, low doc loans we talked about. We also do refinance, everything else. But I think as a mortgage broker, we also do asset finance and personal loans.
All right.